Hi, and welcome to another daily recap. So today I'm going to recap October 31, 2024 at XT 127 on the road to 1 million. So today in EU, I didn't get any trades, but in GU, I got one losing trade. So yeah, actually it's a good loser. I'll show you in the board why I got a loser on this day. So before proceeding into the technicals, first we must understand the fundamentals. Today at 12:30 we had a news, so we must be careful of our positions, the way, and we must also see the prop firm rules on the news trade. So let's jump into whiteboard and see what market has for me on this day. So this is the euro dollar and it's the daily chart. The swing structure is bullish, the internal is bearish, and kind of low resistance liquidity being formed here. The price has served the sell side liquidity and mitigated the daily demand, and it has chopped bullish. So this is the high probability POI where the price can tap into, and then the price can go all the way up to the premium prices before it can push down. So a price swept the sell side liquidity and made a chalk bullish. This could be an early indication that the price has shifted bullish and price can go bullish for some time. This is about daily. So this is a zoomed in version of the daily for better details. But you can see the price has swept the sell side liquidity here, the recent sell side liquidity, and you know there is some imbalance. This is a high probability demand which can be mitigated, which means that the price can come down today and tap into this demand. So though the time frame objective is bullish, the short term objective may be bearish to mitigate this demand. A deeper mitigation means 1 or 2 days can be bearish. And in the 4 hour chart, the swing structure is bearish, internal is bullish, and you can clearly see all the pullbacks right here. If I zoom in, you can see that the price, this is the daily liquidity sweep, and the price has made boss bullish, and it has made an equal highs right here. So what I'm expecting is price can come down, as I said in the daily chart, but it needs to sweep some buy side liquidity. So the buy side liquidity is available on site, very much near. So I I am confident that the price will sweep this buy side liquidity before pushing down. This is the 1 hour chart. You can see the session candles also. So the swing structure is bullish, internal is also bullish, but the price has chalk bearish. So what I'm thinking, price can either go all the way up, take out this buy side liquidity, mitigate into this 4 hour supply, and then chalk bearish to take longs, or price can just sweep out this Asian high and then chalk bearish. Then I can look for shorts. So any of these two cases can happen. So I can play two types of shots today. Case one, price can sweep the buy side liquidity above the Asian highs and chalk bearish again. I can follow the bearish trend. Case two, price can be bullish in the London, taking out the 4 hour buy side liquidity and mitigating the 4 hour supply. Then I can wait for the price to chalk bearish and look to play the high probability case D shots. So both of the shots are valid. The price took the buy side liquidity, but it didn't chalk bearish. Probably price made a chalk bearish candle to fake out the Judah swing players and then take out the actual buy side liquidity that is the 4 hour buy side liquidity, probably. And yeah, first let me show you this one. Price took out the buy side liquidity, but still it made a slight rally down. So this will trap all the M1 and M15 players and then boom. So now the complete buy side liquidity is being taken. The swing traders buy side liquidity, the people who set stop losses here, probably they would enter in the lower time frames, M15 players, M1 players, everyone are gone. Only the safe conservative players are alive. And the price has chopped bearish, and this is the POI that I am looking to target. Actually, a target, but the price didn't mitigate that one. So this price actually made pullback and then pushed down, made a kind of confirmation entry. But even for that confirmation entry, price needs to pull back again, right, to the 61.8 level. But I decided to play only the LC1. So when the price broke this low, I marked this as a lift and I waited for the price to take out this lift. But unfortunately, it was the end of the day and I didn't get any trades on this day. The same thing happened on GU, but in GU, I got an opportunity. So that's the beauty of trading two relevant pairs. The thing is, the analysis is same for all. You can see the analysis will be the same. If one pair doesn't give you the entry, another pair will give you the entry. So you cannot miss a beautiful setup if when you're trading two related pairs. The same thing you can do with Aussie dollar and the New Zealand dollar and Euro GBP and sorry, Euro Japanese yen and GBP JPY. So if you want to trade three charts, so that would be EU and GU and Aussie dollar and New Zealand dollar and GBP JPY and Euro JPY. So these would be the three trade ideas that you can trade on the regular basis. So let's start the GU. In GU, the swing structure is bullish, internal is bearish, and the supply is holding. So I can expect the price has mitigated the supply. So I can expect this load to be taken out. And also, why this load to be taken out? Because price hasn't reacted off from anything. So this is just an imbalance. So price had made a fake push up to trap all the early buyers, and then it can push down to tap into this demand zone. So a lot of things is happening in the market. So this is the buy side liquidity swept, which is a low time frame buy side liquidity, but still it's a buy side liquidity, right? And mitigated into the daily supply. Now this is my daily target. Price swept the buy side liquidity and mitigated the supply and gave a strong bearish rejection. This is a clear indication that the price can come down to take out the daily target. So this is from the daily chart perspective. Now from the 4 hour perspective, the 4 hour swing structure is bearish, internal is or bearish, so the phase A shorts are valid. So the internal structure is bearish, and this is the high probability PY, which I'm expecting the price to mitigate and then push down. This will push the price down to take out the 4 hour swing low, aka the daily target. But this is a phase A in 4 hour. I can't be waiting for the deeper pullback. Thus, I'll be looking for a bearish sweep zone to be formed in the medium time frame and take shorts targeting the phase D. So probably this POI may or may not get being tapped, but definitely I'm not going to wait for that. This is H1. H1 swing structure is bearish. Internal is also bearish. So let's jump into the zoomed in version of the H1 chart. So it's very clean. This is the buy side liquidity, and this is the H1 supply. H1 supply within the 4 hour supply. So what I'm expecting is price to mitigate this H1 supply, chalk bearish, then boom, I'll be taking shorts right away. So uh, the price mitigated the H1 supply, but I didn't get any chalk bearish. So I decided to go counterfractal. I'll tell you what are the phase A criteria. High time frame supporting, medium time frame idea. Yes, it is supporting. You can see the daily and the 4 hour is bearish, and the idea is also bearish. So high time frame as my support. Sorry, I am having the high time frame support. The medium time frame, the this PY satisfies almost all the criteria. So this PY criteria is also satisfied. This is not ticked actually because it is counterfractal. So this is not ticked. You can see this is counterfractal and it is in OTE. So 3 out of 4 criteria met, 75% of success rate. That's fine for me. Anything that is more than 50, I'll be happy to take the trade. Other confluences, there is no opposing demand zones. As a time-based liquidity to target Asian lows, previous day low, New York low, and its low resistance liquidity is also being there. And this is also a weak internal low. So and also there is a clear daily target. So time after of confluences is aligned with. So I'm not afraid to take counterfactual trades. Also, the 4 hour in H1 QR did not make any market structure during, including the fractal. Okay, this is an interesting one. So this was not a valid POI. Why? For valid POI, it must have made a market structure shift. So the market structure shift was not there. But still, this H1 POI is valid because it has made the market structure shift. So this was the fake inducement. So this was the pullback inducement that I was expecting the price to take out. I could have answered using the LC1, but this LC1 was formed yesterday and during the spread hours. So I'm not interested in this liquidity pool. I'm interested in this liquidity pool because all the early sellers would have sold out here and the stop losses would be high above this high. So I can expect the price to push up, take all those stop losses, and then the price can push down. So perfect LC2A. Uh, yeah, this was This is still early, right? Yeah. Okay, yeah. There is my session. Okay. This is H1. This is actually H1. Let me show you. This is the M15 time frame. So perfect. This is the pullback inducement, and it happened during the London lull period. And as per the rules, I can't take during the trade during the London lull. So I just waited for the New York to open. The New York opened, and I expected these equal highs to be taken out, and they were taken out. So I just placed my limit order right there, stop loss just above these equal lows. The thing here is, I made a huge mistake here. I should have placed my stop loss, my limit order here, stop loss above. I made a huge mistake by placing the stop loss just above the equal highs, and I got stopped out, and the rest is history. That was a beautiful trade, but I missed it. It's just a learning phase. And one more thing, this stop loss was not just 14, 15 pips, it was around 21 pips. That's why I just reduced the stop loss to 14 pips because if it was 21 pips, it would have come, the trade would have come around here. Never expected the price to rally this much. So if I knew the price would rally this much, then I would definitely keep a larger stop loss. But yeah, it is what it is. It's just a mistake of by me, not by my strategy. I think it's a bad loser. It should not label this as a good loser. It's a bad loser because I reduced the stop loss. I should have kept it above the liquidity candle, but I just reduced the stop loss and it affected me a lot. As this is the last day of the October, it should have been a 2.5 hour. So if it was the 2.5 hour, then I would have got 5 percentage on this month. But unfortunately, I had to stick with 2.5. I mean 1.5 hour because this is a losing trade, right? Yeah, it is what it is. Let's see. Let's learn from this mistake and not repeat it again. That's the key here. It's not blaming for the mistakes, but learning it and not repeating it is the key in trading. So yeah, that's it from today. See you guys on the next day. Until then, cheers, guys. Bye.